Okay, are we all settled? So the topic of today, OKRs and KPIs, measuring success and driving growth. Let me introduce myself a little bit more. So I'm Anna Kovchina. I have master's degree in economics from Multistate University. It's Russia, my alma mater here. And I also certified management accountant, and this degree I earned here in the US. So I'm 10 years in the US this year. I have 15 plus years in financial accounting, working in such multinational companies as Hyundai Steel, and you can see me here with cars coming off the conveyor. And I in this work for a bookkeeping company. I'm financial controller, and now I have my own company. I'm CEO and founder of AK Accounting. About our services, so we have usually two levels of services. So it's monthly bookkeeping for small businesses, and we try to do it the way that, yes, tax accountant can take our profit and loss and do tax return, but also business owner can look at these numbers. We can explain these numbers to them and try to make sense of them. And the other one is full service financial accounting. So it means that we come to the company. It's usually a little bit bigger company from 1 million to 10 million, up to 20 employees. Or it's pre-revenue, but it wants to grow very fast and have ambitious plans. And so we come as a financial department and we organize everything. Software, payment, invoicing, we talk with vendors, customers, we do payroll, we do financial analysis and advisory, and budgeting, forecasting, we can prepare management reports for board of directors and so on. And we also do some special projects. Here Joseph talked about like financial projections, and prepared them for loans. We do cleanup for several years if needs to be. And we do cash-to-accrual conversions. Sometimes investors come and they want to see numbers not on cash, but also on accrual basis and how it looks and what the prospect the company have. So we do that. The topic today, OKRs and KPIs. And let's be on one page about what it really means. So as John Doerr says, ideas are easy. Execution is everything. It's the willingness to set goals and measure what matters that makes the difference. John Doerr is one of executives from Intel, and he also introduced the OKRs to Google. And they have it from there from now on. So what are OKRs? O, objectives, it's something inspirational, what we want to achieve. And key results, how you measure it. And it should be time-bound and quantifiable, because we need to make sure that we are going into the right directions. And KPIs, key performance indicators, it's metrics we're going to measure every period, every month, every quarter, in order to make sure that we are going the right direction. Align KPIs with OKRs for maximum effect. The example here is improve customer satisfaction and loyalty. I guess every company has such goal. It can be set up as priority. And then we want to make sure what it means for us. So some key results can be increased satisfaction score from 65 to 75 by the end of the second quarter, so it's quantifiable and it's time-bound. Reduce average customer support response from 6 to 2 hours. Achieve customer retention rate of 85%. So we have these key results, and we're going to measure KPIs, metrics, every period, customer retention, average response time, customer satisfaction, but we also want to measure financial KPIs, how it's connected. So, for example, customer lifetime value, it's something what can drive the revenue of the company a lot. And we want to make sure that our goal of reducing average customer support time done cost effective. So if we do it whatever cost is, it's will hurt our bottom line. We need to think about the expenses as well. This one is actual dashboard from one of my clients. We have monthly meetings and we look into numbers regularly. And they have some operational KPIs, of course, but here it's like my input to their monthly meeting. It's profitability and liquidity KPIs. We want to look at both of them because company can be profitable and run out of money. So cash flow is really important for the business. When we look at profitability KPIs, so we compare revenue versus budget, and it's green. So we had like really good project, profitable ones. We overachieve its much data. We look at gross profit margin and net profit margin. Operating expenses, it's something what don't change no matter what. Sales go up, sales go down. It doesn't influence our operating expenses. It's something that helps the business operate. So overhead, and this is in thousands. So we just want to keep it under some amount. Liquidity KPI. We look at cash position, so it's just thousands of dollars what we have in bank, and it's advisable to have 3 to 6 months of expenses there. And quick ratio, cash plus cash equivalents plus account receivable divided by current liabilities. So something that we want to make sure that we can pay in time. And then we have this days sales outstanding and days payable outstanding, and this one in red. So 44 days, it's on average how much time it takes to collect money for invoices we already submitted. And what's important about that, not this situation, but the conversation we have several months ago when we started the project, when we were deciding if we want to go on with this project. It's very profitable, great margins here, but it's kind of risky because they want to pay not in our usual N30 terms, but at least N45. So it is risky, but and we really needed to think if we can afford it. So we can afford it because of cash position. We can afford it because the company had credit line, for example. And my advice always to apply for the credit line when you actually have money, not when you urgently need it. Then the banks are willing to give it on terms preferable to you. As it's getting now, even with this, so we don't put these targets that we want to achieve it no matter what. We want to have these targets, but we want to analyze, we have all information, and decide based on numbers. That's the reason we do it. And this is like my gift to all of you. I'll be sending, like when Florin provides all the emails for everybody from the meeting of 3 clubs. It's the dashboard I prepared in Excel. You can put your data there, your profit and loss and your balance sheet, and it will calculate some KPIs. You can change the months here, and it will recalculate automatically. There are some benchmarks, but they are, so it's very general because these benchmarks are very dependent on the industry and on the period in the company development. So growth period, you will have different goals and benchmarks than stable company. What I want you to look at, it's there are a lot of service business here today as well. And usually manufacturing and retailers, they know their cost of goods sold. But service businesses, not all of them track cost of service. And yeah, it's partly because bookkeeping done for tax return purposes. And they're like all payroll together in tax return, and in service businesses, part of payroll is cost of service. What we're trying to do is we want to separate this cost of service, but we want to do it the way that tax accountant can also prepare tax return and don't have a problem. So we do it with help of accounts and sub-accounts, and a little bit of Excel work maybe after. But when you put your data in this template, try to separate it. It will then calculate it better. We also want to unite all operating expenses, and you have the categories here. It's usually rent, insurance, some dues subscription, legal professional services that we have it separate. From balance sheet point of view, what I see a lot is that small businesses, don't record bills and invoices in their software. And so that's why they don't know about their cash flow, really. And I encourage everybody to start recording it. And if you go to balance sheet in QuickBooks, for example, you can change from cash to accrual, and it's better to put data in this template in accrual basis, and then it will calculate you some liquidity KPIs. So that's this. You'll have it soon. So thank you very much.
Thank you. Thank you.